Hi everyone, I'm Paul Orfanos, National Community Engagement Manager at Delphi Bank, which is a division of the Bendigo and Adelaide Group, and welcome to Delphi Connect, a segment where we'll be interviewing leading experts from fields as far and wide as economics and markets, property, health, scientific research, the arts, community affairs, just to name a few. Hopefully you'll find our segments both informative and enjoyable. Let's move straight on to today's guest, who's a colleague and Head of Bendigo Adelaide Group's Economic and Market Research, David Robertson. David, welcome to our segment.
Thanks very much, Paul. Great to be here.
Firstly, how have you been coping during these uncertain times?
Well, they really are unique times, aren't they? It's extraordinary that for many of us, we're sort of working from home. I saw some Australian Bureau of Statistics numbers the other day. 46% of those in the workforce are currently working from home. So I'm not sure, I think it was single digits before COVID-19. So it's a remarkable change, but it's a sobering environment. But, you know, good to see that the local economy is doing the best it can to cope with these really challenging times.
David, to put these economic times into perspective, let's go back to early March, to that period just before the World Health Organization declared coronavirus a pandemic. Can you give us just a snapshot of how the Australian economy was travelling at that time?
Yeah, it's a good thing to remind ourselves of what things were like prior to COVID-19, and sometimes it's probably easy to lose sight of the fact that in February, prior to COVID-19, we were still coming to grips with the bushfires that had been ravaging many parts of Australia. But actually, if you look at the sort of baseline of Australia's economy going into COVID-19, we had GDP growth of just over 2%. So it's actually quite a resilient economy going into this crisis. The unemployment rate was down at 5.1%. And sure, we had challenges, I suppose, around pretty slow wages growth. You know, maybe you could argue that there was some political, I suppose, lack of consensus around how to fix low wages growth and around energy policies and climate and so on. But the reality is that prior to COVID-19, we did have a growing economy and we had a relatively low unemployment rate.
Let's now return to the present, David. Over the last month, close to 600,000 people have lost their employment, and the participation rate has dropped as people withdraw from a very difficult labour market. What are your general thoughts on unemployment, underemployment, and the labour market in general?
Yes, and it's been a savage impact of the necessary health, social distancing policies that needed to be put in place. But it's had a savage impact on the jobs market. So going into the crisis, there were 13 million Australians with a job, and of those looking for work, there were 700,000 unemployed. And as you said, 600,000 people have left the workforce. So we've gone from 13 million employed to 12.4 million. But the unemployment rate hasn't really picked that up. It only went up to 6.2% in the latest read because the unemployed numbers only went up by 100,000. So of those 600,000 people that have clearly lost jobs all of a sudden, only 100,000 had gone onto the list of unemployed. So I think the real unemployment rate all of a sudden is around 9.5%. And that's staggering that we can go from 5.1 to 9.5 just in a few months. But as you said, the underemployment rate may be an even better measure. Rather than just looking at the unemployment rate, if you look at underemployment, it's gone from below 9% to all of a sudden almost 14%. And just the total hours worked has very quickly decreased around about 8%. So there's clear stress in the jobs market. Maybe one way to think about that, though, is not so much, all right, how high will the unemployment rate go, but how long will we be in this position of so many Australians not having a job who did have one before. And, you know, we actually have seen some tentative signs just in the last fortnight from some of the ABS data, their new payrolls data, that perhaps the worst of that is maybe even behind us, or certainly that it's stabilised. the damage in the jobs market. And that would be good if, as the economy reopens, if suddenly we can start to see an increase in employment rather than, the 600,000 who become unemployed.
Mm-hmm. Academics have recently been talking about a phenomenon David known as wage scarring, where long-term incomes of those entering the labour market are significantly hampered because of unemployment. Do you think we're going to experience wage scarring in Australia?
Look, it's a risk, and I think there are probably two ways to consider this. The first is simply how long will we have a high level of unemployment? And I think the shorter that period of time, the less risks around more permanent scarring of the economy and more permanent damage to the trajectory of wages growth. And as it happens, I see that as quite a large risk in some of the European economies and in the UK and in the United States and some other parts of the world. As it happens with Australia, I'm a little more optimistic, and so I think we're at less risk of that occurring. But it's also worth keeping in mind that we already had a low wages growth environment. So the lack of improvement in standards of living and wages growth was already an issue. And I think the solution for those sort of issues, we were already grappling with those solutions going into the crisis. So I still think the solution rests with government reform, and part of that might be around health and education reform. Some of it might be around tax reform and so on. So they are issues that governments can address and can try to solve.
GDP is one of the classic indicators of the health of an economy. Migration has also here in Australia historically been a very positive contributor to our GDP. What impacts do you think that the coronavirus pandemic will have on Australia's GDP? And also, do you think the disruption of the migration patterns will in itself have a large impact on GDP?
Yeah, it's really challenging to forecast. I note that in the Reserve Bank's recent statement of monetary policy, they talked about a 10% hit to GDP, very rough, estimate, but that sort of magnitude sounds reasonable, and that's a massive hit to occur just out of the blue. So if GDP all of a sudden is 10% lower than it was, say at the end of the first quarter, I think most of the fall in GDP will be in this second quarter that we're in now, through April, May, June. Then the question is, what's the recovery trajectory after that? And you're right that actually net migration or population growth has been helping our economy in Australia. And certainly you'd expect that will be challenged just in the short term. I do hope that the government, returns to an open policy around net migration. The 1.6% population growth that Australia had been enjoying, roughly half of that was happening naturally and half from net migration. So I'd like to see us head back to that sort of number, and we can certainly, afford to fit more people into Australia. There's plenty of room, certainly with, with regional population growth. That's an area that I think can help. But what's natural population growth going to look like? Are we going to have a baby boom at the end of this, much like at the end of World War II? Who knows? But I think population growth will help. And GDP growth, look, I'm not as pessimistic as some about that. The Reserve Bank have sort of outlined a few different scenarios there. One of those scenarios is a V-shaped recovery. Another is more of a U at best. So there are a few factors that will determine that, and a lot of those factors are impossible to forecast, but we can consider those scenarios and make sure that businesses are preparing for a whole range of outcomes.
Let's move now, David, to property prices, which are closely followed by many in our community. There's been speculation of a decrease in property prices, especially in Sydney and Melbourne. Have you come to a conclusion as to where property prices may be in 6 months' time?
That's another very difficult one. Certainly, given a rise in unemployment of this magnitude, you would expect residential property prices to fall. I did see the other day one of the leading forecasters was talking about a 30 to 35% decrease in residential property. I'm certainly not expecting that type of magnitude. You could see that in some of the more expensive, suburbs, perhaps of the larger capital cities, and that was the sort of magnitude of the falls we saw both in the GFC and in the recent, property correction through 2018. But across the board, on average, I would have thought a fall of about 10% is a more reasonable expectation. It's going to vary a lot from state to state, city to city, and region to region. But I think there's underlying demand for property, and a lot of people have been, waiting for an opportunity to get into that market. So if there is a 10% fall, even if there's a 20% fall or more, hopefully that helps some people who've been struggling to get into the property market. I'm actually more concerned about commercial property than residential. And that, again, will also vary from state to state and region to region. But I think one of the challenges for commercial is just the way of working. What's that going to look like? What are CBDs going to look like in the new normal, if you like? And what will that do for demand for commercial property? So I think we just need to keep an open mind about all of that.
I know that one of your specialties, David, is the Australian dollar. Are you willing to have a punt as to where we may see our dollar go against the greenback in the next 6 months?
Yeah, and it was fascinating to see the Aussie dollar dip down to almost 55 cents. I think 55.1 was the official low. What an incredible fall from 70 cents not that long ago. We're back up at 65 now. I suspect, and history would suggest, that those sort of really sharp falls and recoveries are turning points. So my best guess is that we'll probably remain in the 60s for much of this year. But I suspect that by the end of the year, we'll be closer to 70 than 60. It's actually good for our economy to have a nice low exchange rate, both against the greenback and on a trade weighted basis. It certainly helps for export markets and so on. But one of the reasons I'm leaning towards the Aussie being slightly higher rather than lower going into year end is my concerns about the US economy. And, if you look at how they're coping with COVID-19, it's been a less, I suppose, decisive policy response. And I'm fearful that might damage the world's largest economy, the US, and that as a result, you might see some weakness in the greenback, and that might just push the Aussie a little bit higher.
The manufacturing base in Australia has been eroded in the last 3 decades, something that was highlighted recently by our lack of production capacity for personal protective equipment. I was surprised, therefore, to hear the slogan, "Make Australia Make Again." Do you think, as a result of the current crisis, we're going to see an increase in Australian manufacturing? And if so, are you seeing any green shoots in the Australian manufacturing landscape?
Yeah, it's a really interesting one, Paul, because it's really tempting to go down this path of, okay, Australia's been very dependent on global supply chains. We've been very dependent on China, on Asia, and on supply chains that come from all around the world. And therefore, when they break down, we start to query if that's the right model. I heard one of the federal ministers today talking on this very topic, and I actually agree with her that yes, it makes sense to support manufacturing to make it easier for local manufacturers to compete, to cut red tape, and to promote innovation and to do more local manufacturing. But that's quite different to being completely reliant on getting everything locally, sourcing everything locally, which I just don't think is realistic. So I agree with the government's current stance there that there can be more done to make local manufacturers more competitive and to, sort of deregulate that industry on an ongoing basis. But with the sort of economic recovery task force that's been put together to help the Australian economy bounce back from COVID-19, I think there's a recognition there that advanced manufacturing, for example, lots of green shoots there, great opportunities for Australia to compete with manufacturing in things like advanced healthcare, innovative products in mining, agriculture, even things like renewables, absolutely. But I think if we were to take that further and say, let's manufacture everything here, we're a bit kidding ourselves that we could really compete globally with places that actually have a better competitive advantage in some of those manufacturing products. So I think selective, advanced manufacturing makes a lot of sense, and I think we can continue to make ground there. I think the government's policy response there has been sound, but I do get a bit nervous when we almost start to use nationalist language that actually goes against this whole idea that Australia is an exporting nation. I mean, one of the reasons we need to import some things is so that we can export other things, and that needs to be a good two-way deal with a whole range of countries.
Let's shift our focus internationally for a moment. How do you see the economies of our two largest trading partners, the US and China? There's certainly been a lot of talk about tariffs.
Yes. Well, it's really concerning at the moment to see. I mean, we knew the trade wars were already there between the US and China, and that's been, one of the challenges for the economy, especially last year. The global economy was mainly being challenged by those trade wars, and how that's going to pan out this year and post COVID-19 is going to be interesting to see. It might depend who wins the US presidential election in November. But then all of a sudden, the trade tensions between Australia and China are really strained, and I'm surprised to see that. It's certainly bad news for barley exporters and maybe some meat exporters. Let's hope it stops there. Clearly, Australia doesn't want to have a trade war with China, and this is, it looks like a bit of leverage, I suppose, in some negotiations on other matters rather than just trade. But, on the US and China, I'm concerned about the US economy, not just because of the trade wars, but how they're challenged with dealing with COVID-19. I'll come back to China perhaps, but just with the US itself, if you think about the pandemic, Australia tragically has had 100 deaths from COVID-19. US is a country that's 13 times as large as Australia in terms of population and our economy, but they haven't had 1,300 deaths, they've had 94,000. So, the relativities there, it's tragic for the United States. And I think that's going to make it harder for them to reopen their economy because they'll have second waves and maybe third waves of infections. And fortunately here, we're less likely to experience that because we've managed the health risks really decisively. That hasn't been the case in the States. So I am a bit pessimistic about their economy. In contrast, the United States, the Chinese economy seems to be bouncing back relatively quickly. If we look at industrial production and some of the sort of commercial measures there, it looks like a V-shaped recovery for China. Probably less compelling the evidence that the consumer retail consumption side is bouncing back as aggressively. So a bit of a watching brief there. But certainly China was the first to suffer from this pandemic. That's where it emanated from, and so they're the first, like first in, first out. I could certainly see a scenario where their economy, and actually some of the other economies in Asia there, are less impacted than, say, in North America or in Europe. And perhaps that's ultimately helpful for Australia's economy.
Just before we finish, a word about Brexit, which has somewhat been removed from all the front pages with all that's been going on. In your opinion, will the Brexit decision be of economic benefit to the UK?
Well, I don't think so, unfortunately. The UK, their recession looks like it'll be one of the largest of any country around the world. And, we talked about a 10% contraction for Australia. The UK have talked about a 25% contraction in their economy. And I can't see how Brexit helps that at all. And, Europe have got their own issues. The European Union is grappling with how to address coronavirus with, financing some of the rescue packages and so on. And so the European Union were already challenged almost as much as anywhere, but the UK itself, there are just no benefits that I can see that come from Brexit that would help the United Kingdom cope with Brexit. And that's one of the reasons that there's a lot of pessimism around the British economy. And, what's Brexit done? Well, it's made it harder for them to deal with their major trading partner, which is the European Union. So again, if Brexit were about getting out of the euro currency and going back to the pound, I could see the logic. But they're already in the pound. So it's just not clear to me what's to be gained by Brexit, but maybe some UK locals would argue differently.
David, thanks for making time to be with us today. Your economic market insights are very much appreciated. That's all for Delphi Connect. On behalf of all of us at Delphi Bank, thanks for joining us. Bye for now.
Cheerio.